What's up, you guys? All right, well, here we are, 28th consecutive green day. 28 green days in a row. Girl helped bring it together today. So some good action on APOP. That was the stock that I made the most money on. It was the stock right off the watch list, leading gapper. It was choppy. It was really choppy. Some big drops, big pops back up, but I was able to find myself up about $4,200 on the day. So I can't complain about that. My little trading station here is serving me well. You know, it's been now like 6 weeks since I traded in my office down, you know, at work where I would typically trade. Being at home has been a little different, but you know, I've also been on a nice hot streak here, so maybe something about this is working, and I don't know. I'm gonna go with it. So today's a really nice recap. Live trading examples on APOP. I break down a little bit about using TD Ameritrade for the strategy that I'm trading. I talk a little bit about our trading simulator. I talk a little bit about my Lightspeed trading platform, and of course we break down the trades on APOP, AMC, and a couple other stocks. It was a little choppy out there today, but profit was there if you knew how to manage your risk. So I did have a couple losses, but they were relatively small. I was able to bounce back. And actually, I did go red today, but not by a lot. It was after a couple trades on APOP and then one false breakout trade. And then I went from red to green and didn't look back. So it's important to know when to throw in the towel, when to walk away. And so today I'm, you know, throwing in the towel. I'm probably leaving a little money on the table. Probably could have made a little bit more, but $4,000 on a Monday is not bad. Another rainy day here in the Berkshires. This spring has been so funny because we've had like maybe 2 or 3 days where it's been like in the almost 70s, and then it's just been a lot of rainy days. So, and it's like, you know, it's May. I mean, it's almost June. So I really hope that we get some nicer weather here soon. We actually got snow over the weekend. Oh well, this doesn't make a big difference for me sitting here at my trading station. So enjoy the recap today. As always, questions, comments, leave them below. Make sure if you haven't already hit that subscribe button that you subscribe to the channel. And tomorrow morning, as always, right around 9:15, I'll be live streaming here on YouTube my watch list. So make sure you tune in for that. All right, see you guys in the morning. Bye, everyone. All right, so today is my 28th consecutive green day, and I'm going to finish the day up $4,224.43, which is not bad for a Monday. APOP was the leading gap this morning that I was watching, and it's the stock that I took the most trades on, and it's the stock that I made the most on. But it was not easy. I did struggle with it a little bit in a couple different spots. So I'll break down some of those trickier entries and some of the losses that I had. And today's actually a day where I definitely went red. I went red, let's see, after APOP, I had a couple trades right out of the gates and I was basically break even on it. And then I had a bad trade on CLBS and lost 600, and that put me down about $500. And I checked. I was like, all right, that was not a great trade. Should I just stop? Where am I at? And so the way I've been trading here, I have my P&L like this. All right, so this is what it looks like. So after the loss, I was like, all right, not bad. Okay, 500, that's not bad, that's not bad. And then I put it back out of sight. So I'm not staring at the number. And from there, I started working on digging my way out of the hole. I wanted to check because what I told myself is, because I've had this really nice hot streak here, there's definitely going to be a little bit of a temptation on the first day that I go red to try to overtrade and get myself, back out of the red into the green. And I don't want to have the first red day be like a blowout. So if I have a day where I'm down $1,200 and I'm just like, you know what, it's time to let's just throw in the towel here. $1,200 is no big deal. On the month, as of Friday, I was sitting up $37,000. So to lose $1,000 on a red day is not a big deal. Yeah, it ruins the the 28 consecutive day hot streak, but one red day doesn't actually end a hot streak. It's just, I mean, literally, if we looked at this and this was a red day, or this was a red day, or this was a red day, it wouldn't matter. It's still a hot streak as long as those red days are small. It's getting fixated on, having a big green day, or, maintaining the hot streak and then making a big mistake. That's where I could get myself into trouble. So I did want to see where I was at. And when I realized that the loss on CLBS, although not great at almost $700, also wasn't terrible. At that time, I saw that I was only up about 150 on APOP. And I was like, all right, I'm not in a great spot right now. So let's just be careful. And in fact, a good amount of the profit that I got on APOP was later in the morning. It's 11 a.m. and I just finished trading. My last trade was at 11:06 down here, buying at 11:05 on this flush right here, low of 425. I was in at 433, 434, 435, added at 443, looking for that pop back up. It only actually came up to 453, so it wasn't the biggest pop. But anyways, that was my last trade. So let's go back here to the beginning of the day and kind of talk about why I was narrowing in and honing in on APOP. All right, so today, really just like any other day, I sat down around 9 a.m. and started looking at the gap scanner. So those of you guys who are at the very beginning of your learning curve, maybe this is your first day in the room, this may feel overwhelming. And I will tell you that part of trading my style does require a certain set of aptitudes. As you probably are well aware, I'm a pretty fast typer. I am pretty quick on the computer, and that is an asset for me. If you're not good on the computer at all, it's going to be something that you need to learn while you're learning how to trade. So you're kind of needing to learn, two things at the same time: how to get faster on the computer and how to get good at trading. Now, Mike, of course, trades a strategy that's a little bit slower. And so it probably wouldn't surprise you that a lot of the people that are trading Mike's strategy tend to be folks that prefer a little bit of a slower moving strategy, one that's not quite as fast or quite as aggressive. And that's not true of that everyone in there necessarily is like, a dinosaur and is like really bad on the computer. It's just that they prefer a strategy that's a little bit slower. So we've got 2,300 in the small cap room right now. Let's see. Where's the large cap room? I must have this tabbed out. But in any case, so we've got, there's the large cap room. So we've got 800 here in the large cap room, 2,300 in the small cap room right now. But the large cap traders are primarily trading stocks like Netflix and AMD and talking about Disney and Tesla and things like that. Whereas us over in the small cap room, we're kind of the some of the cowboys and cowgirls who are being really aggressive on stocks like APOP. So this fits right into my wheelhouse. So APOP was gapping up 118% this morning. All right, 118% is not a small gap, and I saw that there was a headline here, positive data. This is a biotech stock. So I was like, all right, all of this checks out for being something that I would be interested in trading. However, given the fact that I've been doing this for almost 10 years, I saw APOP and I was like, yeah, I know that stock. I've traded it many times. In fact, I've had some really big wins on it, but I've also had some big losses on it. So the first thing I wanted to do was look at the daily chart. So this is a chart right here going back to September of last year. This is a daily chart. Each one of these candlesticks represents one day of time, right? We can look at candlestick charts really on any time frame that you want. I mean, you could select even the most obscure time frame, like a 24-minute time frame, and maybe there's some people that use it, but most people use 1-minute time frames for day trading, 5-minute time frames for looking at day trade patterns, and then maybe some people use 15-minute or 60-minute charts. And then, of course, there's people that refer to the daily chart for finding that daily level of support and resistance. So on this one, as I pulled it out, I can go back and tell you there's been some instances back here of some really big moves. This was 2017, and I traded it on this day. This day, these were days that I was trading it. Big moves. But then it started to have a little bit of a history of gapping up and selling off. Big red candles, going lower, coming even lower, a gap and a bit of a pop here before going lower, dropping lower, gap fade here, another gap fade here, reverse split, squeezing from a low of, let's see, about $1.58 here up to almost $3, then the next day to $4. But at this point, it has a pretty well-defined history of gapping and fading. So I presented that as a concern this morning as I was doing my watch list. However, from technical perspective, we've got room from 463 up to 689, and the 200 moving average on the daily is at 333. So if we go into the Warrior Pro classes, which many of you guys are part of, in chapter 4, this is where we break down those daily windows, the gaps and windows of what really qualifies as being a strong daily chart. And I do think that this had a strong daily chart from gap and window perspective, but a weak daily chart from the fact that these recent gaps faded. So right out of the gates, my bias on it was naturally to the long side, but as you can see, as we started the day, pretty much right away we ran into a little bit of trouble. And so let me pull up a couple of my recordings on this here. So, as always, right at the bell, I try to turn on my recorder. So this was like right at 9:30. I turn off my free watch list that I do on Facebook and YouTube. Then I switch my scene to the main monitor, and here I'm about to start trading. So APOP, and maybe before I break that down any further, I traded it out of the gates, but let's look at the pre-market chart in a little bit more detail. So as I saw it here, this scans how I find the needle in the haystack. So this is presented for you guys, of course, as Warrior Pro students in chapter, I believe it's 11. I go through how I've set up the scanner, and you guys are able to stream it, of course, every day. So our leading gapper was actually ACB. However, why was I not interested in this? Give me two reasons, those of you guys who are watching live. Reason number one, well, clearly the float says 1.6 billion shares, 1.16. The float's crazy high. Number two, well, wait a second, 1,122% gain, that's strange. So when we pulled it up, what we identified was that they had just done a reverse split, a 12-to-1 reverse split. So the stock was probably at about 50 cents. They did the reverse split, now it's at $7. The float has also gone down by 1/12. So it's 1/12 of what it used to be. So the float's actually going to be about 100 million shares. That's still too high. I don't see a catalyst here that I like, and it was already looking weak pre-market. So not interested for a number of reasons. So APOP was the second one that I liked, and this was the leading gapper. Now, although we did look at AMC and I made 60 bucks on it, and we did look at ZKIN, and I said these ones were interesting for various reasons. The only spot I traded AMC actually was the bounce off of the this moving average right here, the 200, which, as it turns out, I could have held that quite a bit longer. That was a nice entry. Sometimes, just as a side note, I had someone who commented, I think Jeffrey, on one of my YouTube videos. He said, Ross, it's frustrating to watch you stop out with a tiny profit here of $64, only to see the stock 30 minutes later do this. Why don't you just hold these sometimes for a couple hours or a couple days? And so the thing is, when you're in a trade, you have exposure risk, and that the exposure risk is that while you're holding that trade, news could come out, bad news, and suddenly the stock drops. And so while I'm in a trade, I feel like I have to be staring at it. And because I take trades for such short periods of time, I usually put a lot more money in, but for a very short window. So the window helps reduce my exposure. If I was going to be in a trade like this for 30, 40 minutes, I certainly could have taken that entry down where I was in at whatever this was. I think it was 492 that I got in and held. I had just taken a trade at 505 and stopped out at 5. So I lost about 300 bucks on my first stab. I then got back in at 92. When it popped back up to 5, I wanted to sell half. I fumbled my hotkey and inadvertently sold the whole thing, which was annoying because I sold it at 98 and then immediately it popped to 505. But even if I had not fumbled my hotkey and sold half at 98 and then the other half at 505, at this point it hit 510 and I could have maybe set a stop at 5 on this and let it hold it a bit longer, but then here it goes to 520 and then comes right back down to break even. So it sometimes for me feels hard with larger share size not to take that $400, $500, $600 of profit off the table. And look at this. Here it just squeezed up to 60, but then in one candle drops back down to 40. So if I was holding the whole thing, would I still be holding through that 20-cent pullback? Where would I set my stop? And then finally say, okay, enough's enough. And so for me, although you can certainly create a different strategy for taking profit, and you could adjust your share size so that you could hold for a bigger move and not feel as concerned, I tend to be more aggressive with my share size, quick entries, quick exits, and then reevaluate and come back to it. In this case, I didn't come back to it. But it's, again, a little bit of a risk tolerance question of which you prefer. And some of that decision may be dictated by your aptitudes and by the trading platforms that you're using. So if you're using a platform like TD Ameritrade, TD Ameritrade, as many of us know, is not really customized for super aggressive day trading. I don't know a lot of really, really good and seasoned day traders that use it, although I do know a few. So it can be used for active day trading. But really, TD Ameritrade and Thinkorswim was developed for passive investors who take a couple trades a month, maybe buying and selling, for their 401k, and not super actively getting in and out, in and out, in and out. So if you have a platform like that, you may feel that it's hard to make 2 or 3 cents a share consistently, and it's easier with smaller share size to go for 15 or 20 cents. For what it's worth, I will pop up my TD Ameritrade account here and just show you a couple of examples. So I'm going to log into the paper money account just so I can take trades and it's not real money. So anyways, on APOP, this was what I thought would be the leading gapper that everyone was watching. And that's important because the stock that everyone is watching will respond better to the technical patterns as we see them. So I'm going to delete some of these lines here and kind of bring it back to the way it looked earlier this morning before I really started aggressively trading it. All right, so we're going to get rid of these. Okay, so we're back to a fairly clean chart. And just to get everyone, on the same page, I've got a 1-minute chart over on this right side. I've got a 5-minute chart right here on the left. And this is my daily chart down here. And this is my news window that eSignal automatically populates news with. Now, if I pull up a stock here like Facebook, it doesn't link here automatically. I do have to type it twice. It's a little annoying, but I've gotten used to it, and I type pretty quickly, so it's not that big of a deal. All right, so APOP, the pre-market chart looked like this. And I thought, this right now looks very nice for a break over the pre-market pivot of 550. So I would call 550, 548 this kind of pivot where it hit a high of pre-market 584, but then it pulled back all the way down to about 450 or so, a pretty strong pullback down here, 460, before curling back up. So out of the gates, I had a long bias, and I knew the volume weighted average price, this orange dotted line, was at 95. So I was considering possibly that my first trade could be a dip down to that level for a squeeze back up. And in fact, we did get that, but not in a way that was particularly easy to trade. So I'll show you the live trading recording on this a little bit. This, of course, is the platform as it sits right now. This is the recording of where I sat in the morning. And for those that are using either TD Ameritrade or our Warrior Trading Simulator, I'll pull both of these up just to show you sort of the example of how I would have taken the trade in these platforms. So our Warrior Trading Simulator, we license from Sterling. Sterling, of course, is a provider of trading platforms. They service Lightspeed, Centerpoint, CMEG, and a bunch of other brokers. So in the trading simulator, and one of the things you'll notice is that Lightspeed, the platform that I'm trading in, this platform is very similar. In fact, Sterling maintains this platform for Lightspeed. So these are the same exact data feeds. Very, very similar platforms. Now, if I type in APOP here, my order entry, I could say, okay, I want to be a buyer at 450 and have it set up and choose my share size, et cetera, et cetera. Very similar to what I would do here, 1,000 shares, 450, very similar. Now, TD Ameritrade is a little bit of its own platform. Nothing really looks exactly like TD Ameritrade. It's very custom to TD Ameritrade, which is kind of annoying because when you learn how to use it, those skills don't really translate super well to other platforms. And when you learn how to use Lightspeed or Sterling, when you come over here, you're going to get confused as heck. So let's just pull up APOP. So if I want to buy this down here, of course I can switch this time frame to a 1 minute chart. You can do all of that. That's fine. But what you don't have is a traditional order entry window. So the order entry window that I like is this right down here where I can actually type 450 and then click the buy button. You don't have that here, which is really incredibly annoying in my opinion. You have the level 2 right down here, as you can see. It's kind of stretched out in a much bigger way, but you do have it. It's a blue gradient instead of green and red and yellow, and you can't change the settings. So this is just the way it is. And then if you don't use that, you also have this price ladder, which is kind of odd. So generally, I find that it's not super intuitive. You can enter your share size right here, and that's what most of us do. We would enter a share size here. We would tell it to auto send. And if I want to get in, the way I usually buy with TD Ameritrade would be click buy market. And right now I'm in at 24. Wait, trade price at 24. Oh, I must be on delayed data on this one, because obviously it's showing me the current price is 47. So it must be delayed data right here, which is even more confusing because it's showing that my P&L is 220 when it's really not. But anyways, I think it's just because I'm in the sim or whatever. Yeah, it says delayed data. So whatever, that's fine. You can get real-time data on it. I really should be on real-time data because this account has money in it, but it doesn't matter. So anyways, usually the way I was getting in was buy market, and then you can click flatten, and just like that, it'll close you out of the trade. And then you look down here and you're like, okay, well, what was it? Oh, I lost 120 bucks. Okay, so that was my profit. But it's not super clear of exactly where I got in and where I got out. I would then go over if I really wanted to see to monitor and then to limit orders filled, and I would actually pop this out, and I would usually keep this kind of down here like this, so I could see the actual price right here of where I got in and out. And so usually the way I kind of have used TD Ameritrade, I kind of make it, I sort of work with a couple different windows, one's down here, one's right here. And then I'm basically getting in with buy market and either sell market. So I'm in and out like that. Or I add buttons on here to buy the ask, which I don't like because oftentimes orders won't fill if you just buy the ask if there's not enough shares. So what I also tried doing was using a cancel all. I guess we have that right there already, but I'll just add it again. So I'm going to say cancel all, move up, and I'm going to add one for sell ask. All right, so sell ask and move up. All right, so there we go. So now I can click buy market, and I'm going to be in this at about 16, right? I'm in at 16. It shows my current price here is 16. And now I could join the ask I could change this to 500 shares. I could join the ask right now. And I'm on the ask right now at, well, see, it's doing the ask at that price, which is the problem because I'm on delayed data. But if I was on real-time data, the ask would be right around 16, 17. So I can go down here. I can also just click this. Let's see. So sell 500 at 17. And see, that's not, it's this delayed data is the issue here. So anyways, I'm just going to click sell market. It's fine. So sell market and sell market, and I'm out at 18. And I want to make sure I don't have any working orders, and I don't. So anyways, you can use this platform, but you may find that your strategy is going to be, you change your strategy a little bit because it's a little harder to get in and out very quickly, very precisely. I'm still holding 500 shares, so I'm going to go ahead and sell market on those 500. And so now I'm out. Profit loss is down $105. Whereas over here, you can very easily get in with hotkeys and get out quick. So I mean, it's kind of which one would you rather do? You can see how fast I'm trading, and although you can set up some hotkeys, they don't work as well on TD. So back in the main account here, out of the gates, I am buying the dip. So I'm buying the bounce off of 5. I'm thinking that $5, whole dollar, psychological level of support is going to hold. And it pops here back up to 515, and just like that, on this trade, I'm actually up, as you can see, $645. I bought the dip. Now, the hard stop on that was $5. $5 hard stop, so I have 6 cents of risk. All right, so 6 times 3, I'm risking $180 to make, in this case, $645. Now, on the ask, we see 19,000 shares at $5.30. So 530 right now has a seller. And because we already have 5.4 million shares of volume, and we're 9 seconds into the day, and in this current 1-minute candle, we've probably already seen 200,000 shares of volume in 9 seconds, I think it has a good shot at breaking 530. Unfortunately, it's not able to. So it looks here like it's going to break, right? And so there it fails. It drops back down. And so in this case, I am selling 1,700 shares, and then I'm still holding 1,700 right back to break even. And that's how, even with fast software, I didn't take the profit quickly enough. I didn't take it off the table, and I did end up giving it back. Now, I'm looking still down here, and actually I just added 1,000 shares at $5. So on this trade, my bias changes a little bit, because here I sell half at 28. So I am up $650, and I do sell about half of my shares there. So I've got about $300 of profit. So even though I'm still holding at 506, I've got some profit. A quick drop like that, we're still near the VWAP, and so I'm looking to add. Again, now, new stop is the low of that pullback. And so I add at 5. There's a pop up to 515, and on that one, I just sell the whole thing. So I'm like, you know what? I'm just going to take my profit, or whatever it was, 512. So I have profit there not only from 506, but also from the shares I added at 512. All right, so now we're looking for a pullback. So right in that moment, I had a little bit of a cushion, obviously not a huge cushion, and I'm looking for my next possible trade. But unfortunately, this one is just not clean at all. It gets very choppy. It ends up doing, as you can see, if we look, jump this back out to the my charts over here, this ends up doing a flush, a drop all the way down to 466 before ripping back up to 524. So this, I mean, look at this roller coaster. Down, up, back down, back up, back down, back up, big flush right here. So this was a very choppy stock. I think what was going on with it was that you had a lot of folks who had a very strong short bias on it because of its history of failing. But you also had long bias traders who saw it as the leading gapper with a nice pre-market chart, with news, with no real resistance on the daily, and the potential to get in with tight stops on these pullbacks and then ride the momentum. And so I think in these moves, it was squeezing out short sellers. And then I think it was trapping long traders who were then getting back out. So if you sort of think about this as if you're going short on this right here, you're like, okay, this is weak. I'm shorting it for the break through the lows. And then all of a sudden it rips up. You might quickly cover. And a long trader might get FOMO and chase it long. And then it comes back down and a short seller goes short again. And a long trader bails out. And so now you get that extra push to the downside. And then it does a false breakout here. It drops. Long traders get stopped out. And then it starts to curl up. Short sellers stop. Long traders jump in. Some short sellers squeeze out. Some long traders FOMO into it. And then smart traders take profit, sell. Short sellers go short. Long traders who have FOMO bail out for losses. Short sellers get aggressive. And you get these just crazy moves. So this is a perfect reflection of that irrational strength and weakness in the market. There is a way to capitalize on it, and it is also very easy to fall victim to it. And I had a little bit of both happen, where I had a couple trades that I tried to hold for bigger moves, ended up getting stopped out, break even on them, or even having them turn into a loss. I had a couple of dip trades where I capitalized on the panic really well. This one down here, and I'll show you this example. This ended up being a pretty nice trade here. Let's see. So this one, where is this? Okay, so this was a trade right through there, but I'm really going to focus on, well, actually, this is an okay one. So right here, I had a position, where do I stop out of that? So on this, I actually did a dip entry right down here on APOP. I thought it was starting to consolidate here, and I believed that if it broke over 505, we would see a move up to 520, 530. So I'm in here at 587 with a stop at 487, 486 with a stop at 476, which is the volume weighted average price. So I'm using about a 10-cent stop. Now right there, in that moment, I'm up 150 bucks. And I'm looking for this to break back over 5. So I'm watching here. I'm looking to add for the break back over 5. And I end up adding, let's see. It comes up here, starts to look like maybe it's going to squeeze up. Some green, well, there's red right there, but some green coming in. I'm looking for the first candle back over 5. So watching, so right there I add. Now my cost basis has gone up to 492, and I have 6,000 shares. And again, I've got my hand on the button to add. I'm looking for the break over 5. I'm thinking if it breaks 5, we're going to get a quick rip. And even though adding up here is certainly adding at a slightly higher price than 88, what I thought I was getting was confirmation. Green volume coming in right as we're about to break over $5. I ended up being wrong. And instead of taking my profit right here or getting out break even, I ended up holding it and stopping out I gave it a second to pull back, but then when it broke the low of 85, I was like, I got to cut it loose. I can't keep holding it. So right through here, I could have gotten out break even. And I probably should have breakout or bailout. It either works right away or I should cut it. And in this case, I held it a little longer and then I finally stopped. Right here, this was a critical line in the sand, 85, a double bottom. And I did not want to hold if that double bottom broke. So as I started to see selling down here, 88, 89, 88, nope. I was like, that's not good. That's not good. I'm afraid it's going to break 84. So I hit the bid, full size, and I got out in the nick of time. Now it's down to 70. And this was the beginning of it really rolling over. So as it starts to roll over here, it ends up breaking 70 and coming back down lower. And watch right here. So it ends up doing a really firm break here, flushing down to 50. And now this is where you start to have that, short sellers going short, long traders bailing out. Obviously, I had no shares available to borrow of this stock, so shorting it wasn't an option. Here's lots of sellers at 50. Boom, to 47. Now, on this stock, we had support back here at 435 and 430. So those were levels that I was watching for possible dip trades. Watching here, boom. That is exactly what I was looking for a dip, because that was such a quick flush. So I went ahead and jumped in right there. So I'm in on that dip, and my stop is at the low of 25. So my hard stop is 25, and I'm looking for this right now. That's $600 off the lows. But I was looking for it to break over 450. Unfortunately, it didn't do it, and it kind of had psychological resistance at the $0.50. Although it ended up being a winning trade, it wasn't as big of a winner as I was hoping it would be, just because it couldn't break back over that $0.50 as quickly as I thought I wanted it to. So anyways, this was a day where this stock was very, very wild. And again, over in TD Ameritrade, if you were actively trading in this type of account, some of those entries would have been a little difficult. I don't usually like to use market orders with my trading, although with TD Ameritrade I did, because if I use the buy ask and I don't get filled, then I have to go cancel the order and click it again. And, if you buy the ask right now, if I want to buy 2,000 shares, there's only 100 shares for sale at 21. You see the 1, the 2. You might not be able to buy 2,000 shares without getting a little bit of slippage. So buy ask really only works well on very thickly traded stocks, and even then you can still end up having your order not fill. So what I wish you could do is actually type in like a traditional order entry window, which is what every other broker uses, even E-Trade. But in any case, I know a lot of you guys use TD, so it's not that you can't use it. You just have to be a little mindful of what your what your kind of restrictions are, just based on the functioning, the way the platform functions. So so that was my trades on APOP. CMT, that one hit one of my scanners, which was showing us that it was moving up very quickly. That was in this area. I jumped on the momentum on this, got in it pretty high, but we had a first 1 minute candle pullback right here from 56 up to a high of 86. I was in, I think, at 51 or right around there. So a nice 30-cent breakout, which on 4,000 shares ended up being almost $1,000. AMC, which I showed you already, and CLBS, which was my worst trade of the day, and a disappointing one because it was so incredibly weak. Hit the high day moment scanner, squeezing up. And when I first saw it, I was like, wow, this thing is ripping up right now. I wonder if there's news that just came out on it, because this is a substantial squeeze. So it all of a sudden rips up right here, and I bought this little pullback long at 250. It hits a high of 260, and then all of a sudden this candle, it flashes down to 218. I was just kind of like, all right, well, that's it. So it popped back up right here, and I stopped out before it actually flushed lower. And it actually dropped all the way down to a low of $1.92. So it popped from 210 to 260 back to 192. Very, very weak. That's not something you like to see. And that's a reminder to be really cautious on low volume stocks. And it's one of my notes that I leave to myself: be careful on low volume stocks, because they can really do a number on you. And this was a close call. It could have been a much worse loss. But in any case, I did end up making that back through APOP and CMT. So all's well that ends well today. Another green day, 28th consecutive green day. And hopefully for you guys who've been trading in the simulator or watching on the sidelines, you're able to make a little bit more sense of how I'm finding these stocks, where I'm getting in, where I'm getting out, how I'm managing my risk. And it's all the pieces coming together ultimately. Risk management, stock selection, understanding the patterns, and being able to capitalize on some of this irrational fear and greed in the market without falling victim to it. And it's walking a tightrope. And learning to trade isn't something obviously that happens overnight, and it only comes with a lot of experience, a lot of practice. But it certainly it's a very rewarding skill once you learn it. So I hope those of you guys watching a little bit from the sidelines Well, jump into one of our classes or check out some of the links that I have in the description, which will help you as you're continuing to learn. And I will be switching gears here to do a Warrior Pro Mentor session. So I'm going to jump into the Warrior Pro room and we will do some Q&A. And then I'll be back at it live tomorrow morning, right around 9 a.m. for the watch list. And hopefully we see some good trades, good opportunities on the gap scanner. All right, so that's it for me. I'm gonna switch over to the Warrior Pro room and I'll see you guys in just a moment. You wanna learn more about trading? Check out some of the links in my description. And if you have questions, ask them in the comments. I personally respond to every question posted on my channel. And don't forget to subscribe.